Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is a U.S. mid-session brief. Today, we're going to go over the news events, the key events that were out today. We had a whole big rash of reports. I'm going to go through and break those down for you, led by PPI. We saw some inflation statistics. Once again, I can't stress this enough. These numbers are old. These are all coming from the government shutdown. These things developed back in September. So what the real state of the jobs market and the real state of inflation is, we really don't know. We're still recapping the old data. So we're going to go over that. We're going to look at some old data today. There's some big news coming off of Capitol Hill. Looks like there's going to be some FBI indictments or some FBI interviews scheduled against some folks that made a video that are in Congress. Interesting stuff that sort of undermined the orders of the power in chief or the commander in chief. I think that could potentially be something that we're going to have to dive more and more into if you do in fact see this kind of divide in the government, especially when we're talking about military strikes on Venezuela. We're talking about domestic issues. That could potentially be a big market mover just because it could drive uncertainty. So we're going to be watching that. But right now the markets are up. We're definitely in the green. The Dow's up about 530 points. S&P 500's up about 43. NASDAQ's up modestly, probably the laggard for today. As far as U.S. oil goes, I'm starting to see stories. $30 oil, $40 oil. That's funny. We've been talking about that for a long time, and it looks to me like we are going to challenge the yearly lows and potentially get a breakout beneath that 55 level. I'm watching that closely. Right now, U.S. oil right around 57.75. We should pretty much be comfortable with the bearish side of that market. I don't really see oil jumping unless we get that attack on Venezuela, and we just don't know that it's coming anymore. Typically, that's the way of it with surprise attacks. They don't tell you when they're going to happen, so we're going to do the best we can managing that. We have a trade idea out in Bitcoin. There was an interesting one. We have a question here. I'm in the live chat in the How to Trade room, so I'm going to answer. I'm going to begin by answering that one. So good to see you, Lewis, out in YouTube land. Team Marina, good to see you. Team Marina, Tuku, Lita, Gordon, good to see everybody back in the room. This is one of those weeks that it's going to be lightly participated in or lightly attended. The markets right now are going to start drying up over the next 24 hours. Expect that real, I would say, not necessarily a market closure because Thanksgiving is strange. The Wall Street's shut, but I believe there's still some futures trading going on, and we know that we've got the forex is going to be live, and we know we've got Bitcoin in the crypto. So you're going to have action on Thursday for Thanksgiving, but the biggest thing to remember is the U.S. liquidity providers are going to be out of the office. And when they're out of the office, typically you see a much, much lighter type of a schedule, and you don't see very robust price action. Everything looks sort of disjointed. So be ready for that on really beginning tomorrow afternoon. So I'd say right now it's 11 o'clock my time, 1 p.m. Eastern. You're probably going to be looking at liquidity drying up about this time tomorrow. Now, we may get a big flurry of action before the close. I don't see it, though. A couple of things that we need to be aware of on Thanksgiving Day. I'll probably talk about this a little bit tomorrow. The futures contracts, they do go back on the market at about, 6 o'clock Eastern. And so that's going to definitely a potential move in gold. I've seen it happen in the past where Thanksgiving afternoon, Thanksgiving evening, you do sometimes get a big move when those futures contracts reopen. So we've got to be very careful there. Black Friday, we've seen moves in the past. On Friday, people do trade it, but just remember, there's not going to be as much participation. That's the number one thing you got to take away from this week is this isn't the time to take huge risk. If you're going to trade with big leverage, I would say today's maybe the last day to do that ahead of the break. And then if you want to do that tomorrow, maybe on that Wednesday session, maybe London Wednesday session, you could probably pile in till about the midday. And then after that, it's going to get really dicey. So definitely wanted everybody to know what's going to happen here. I don't want anybody to get caught in those giant trades with the big spreads and the crazy action. I don't want you to get caught in that because that can really hurt you, and it can do it quickly. So, Bobby Bob, good to see you, Bobby Bob. Andrea Garwal. Hi, Andrea. How are you? I'm doing very well out here. I feel a little bit better since yesterday. My voice has come back a little bit, licking our wounds after that tough loss over the weekend. Still a little bit agitated by it, but that's okay. It's just football. We got to talk markets. All right, I have a great question to begin this live stream with, and it's over there in our How to Trade trading room, and it's from Gordon Williams. Why do you use the 4-hour charts for intraday trading? Why not use a 5-minute chart? Is it because you can see how the day is either moving up or down and then trade with the trend? I mean, essentially, yes. The big difference between a 5-minute chart and a 4-hour chart is the amount of information held in each candle. I really want to stress that when we look at a daily chart or a weekly chart or a monthly chart, there's a tremendous amount of trading that's taken place inside of those price candles or those price bars. That's information. That's the story of the market. That's okay. We're up, we're down, we're sort of settling in this zone. There's a lot more participation and a lot more trading that goes into, say, a daily candle or a 4-hour candle than a 5-minute candle. Now, I've had this argument with a lot of people over the years, and I genuinely, it does not bother me if you want to trade 1-minute charts or 5-minute charts. And I used to have this argument a lot with one of our partners, and he'd say, listen, I don't care what the chart, it doesn't matter the time frame. As long as it's a chart, I can trade it. And over the years, I found that a 5-minute chart is nowhere near as accurate or as comprehensive as a 4-hour chart or a daily chart. So if you want to trade short time frames, absolutely go for it. Just remember your risk. You need to dial in your risk. It's got to be lower than the bigger trades. It just needs to be, unless you're just you got some sort of system that you're running, maybe an EA or something. Then you can just assign your risk and rock it. But for me, a 4-hour chart, especially when we're talking about like a Bitcoin, a gold, or a forex pair, that is giving me much more information so I can actually make an informed decision on whether to buy it or sell it. And the big thing I would remember is sort of what you said there, Gordon, is for intraday trading. And the trade idea we're going to go over here in just a second for Bitcoin is a 4-hour chart, and it's not necessarily an intraday trade. We're probably looking at a swing trade. So I think of a 4-hour chart as, yeah, we can do some intraday trading on it, but it's more of a swing trading type of a device or a duration, in my opinion. Remember, there's only 6 4-hour bars in a day in a 24-hour period, so you're probably going to be taking swing trades, and I've found that to be a very good time frame for forex pairs. It's my favorite for forex. I like it on gold, and I also like it on crypto because those are 24-hour markets. They really are. So something to think about there. Let me see. Oyuna, I'm terrible with names. Oyuna, good to see you. Welcome. Your 9 EMA strategy was a game changer. Well, the 9 EMA is a pretty good strategy. It's a pretty good strategy. You need to qualify it probably with some confirmation. And we'll do another webinar. Tomorrow we're going to do a live trading tick webinar. So we're going to be doing that over at Switch Markets exclusively and in the How to Trade trading room. We're going to do some tick scalping and see if we can make a few bucks. That's for sure. All right, guys, I've gone on long enough. Let's go ahead and get right out to price action here. Remember, if you want to trade anything that we look at today, head on over to Switch Markets. If you're a brand new customer, Black Friday is a pretty good time to get involved. They've got a great deal over there for you going for about the next 2 weeks. So if you're interested, head on over, check out the bonus. It's a pretty good one. I believe it's a cash bonus, and cash bonuses are good. And if you're an existing customer, remember 0% commission accounts, tight spreads, and all sorts of credit options that they have over there for you. So let's start off with our trade update here. A 920 EMA trade. We put this trade idea out a bit earlier today. I really liked it, buying 87s, and it's going pretty well. We're already long this market. It's a little bit different entry than a traditional 920. You can see we've got our big gold candle. That's our buy signal because we just came on today and wrote that up this morning. I said, why not just buy the retracement and give ourselves a pretty good opportunity to take a position here in the Bitcoin market. I like the trade. And right out to price action, here you go. So we were looking at about an 87 flat, somewhere in there. Essentially, it's a market order from when that thing came out. So we were right down in this zone, somewhere in here. Beautiful pullback, nice big buy. The buy was up there at about 88. Nice, sort of went right up to 90, doorstep at 90, and then retraced back down to our moving averages. And we took a long right in here, which is a pretty good price location. Now, the idea here is very simple. We're looking to get that rally, that pop, up to about 94,000, somewhere in there. I think we could probably get it. It wouldn't shock me if we get it in the next few days when the markets are closed or when there's less liquidity. Would not shock me to see people jump in and buy some Bitcoin and trade some crypto, definitely during Thanksgiving or potentially on Black Friday. Joshua, good to see you, Joshua. Hello. As far as what we're looking at right now, the premise and the idea behind this trade is relatively simple. I wanted something that was going to be active this week, the whole week. So forex pairs, probably not so much. Commodities are going to be a little bit rough because of the market closure, and then stock indices, that's probably going to be a no-fly zone after tomorrow morning. So when we're looking for something to trade on a holiday, probably crypto. Probably crypto is not a bad way to sort of lean and get into it. In any case, we've got a nice little bid right there at 87, so we're up a little bit. The idea behind this trade is very simple, though. We want to capitalize on this bounce off of 84. Now, we sort of drew this last week. This is a big Fibonacci retracement sequence, and it's from the lows back in 2022 all the way to the highs earlier this year in 2025. Really a massive range of about, what are we down there, 15,000 or 16,000 all the way up to 126,000. And it happened relatively quickly, 2 years? 2.5 years. Incredible run. I think that what we're looking at now happening in crypto is we're definitely being set up for a bullish breakout, more than likely coming in early 2026. I think interest rate cuts are going to help that. The Trump administration and the government is definitely pro-crypto. So to me, that 84 level is a big deal. So how did we do it? Well, we took our big level, said, okay, 84s, that would have been the bid. That would have been a great buy. But right now we got our 4-hour crossover, which is going to be pretty good. So we took our crossover, and we're looking to take a position and make it rally. So first thing that I would be asked is, Shane, where's the stop loss? What I like to do is design these with a 1-to-1 risk versus reward. So if we're looking for 8,000 pips, essentially that's about $8,000. I believe we're working a pip a dollar, something like that for Bitcoin. And so this big rally right here, we're looking from 87. We're looking at a profit target right up in here, right around 94, 95-ish, right? Well, if that's the case, then where should our stop loss be? Stop loss should be about a 1-to-1. So you'd be looking to risk something just underneath 80 would be your stop out point. And it's not necessarily a bad trade. It's just all about, did we time it correctly? Do we have an opportunity to get this done? Timing's everything. I think it could be pretty good. So I'm going to watch this position closely. We're going to see this thing unfold. For me, I would love to see this market get established back up above 90. If that happens, I think we have a really good chance in this one. But we're just going to have to wait and see exactly how it pans out. Steve Francis, good to see you, Steve. So in any case, this week is definitely going to be interesting. We're going to do some tick scalping tomorrow. I'm going to talk a little bit about holiday trading. But the biggest thing that you need to remember is don't rush in. What's that old saying? Fools rush in. Don't rush in. Take your time this week. I'm really preaching caution because it's a good time to be cautious. As far as what we had Monday was quiet, not much news out. Tuesday was PPI and retail sales. We had a lot of numbers out today. Tomorrow's going to be EIA crude oil inventories and stocks. Should see some action out of the crude oil market. We're looking for another big supply build there. Thursday's Thanksgiving, so pretty much market closure. Friday is Black Friday, which the markets will be open and you can trade them, but you've got to be careful. And I just tell you from experience, I've taken losses on Black Friday and it's no fun. And nowadays I go a different direction with it. I would much rather put all the money that I was going to risk this week, I would much rather put that on the line next Monday than I would, or tomorrow morning potentially on an early session scalp than I would on Black Friday. It's just, it gets to be really difficult. Let me see. Let's go. Steve Francis, hi Shane. In the UK, we have the budget tomorrow. Do you think the sterling will come under pressure as it looks like tax rises? I think that the Great Britain pound's been relatively solid. You're looking at a rally that's about, what is it, up 0.75% today? So if we're looking at the pound sterling thinking, okay, what could we be looking at here? Well, I mean, we could be looking at a big-time breakout. You can see right here, here's sort of your doji formation. That would have been your buy on the 4-hour chart right in there. You can't see it because it's a pure doji, but you can see that's sort of our signal candle right by that crossover. Big-time rally. So as far as coming under pressure, it looks to me like somebody already knows, what exactly is going on in that report. Now, the dollar's fading a little bit today. You're off about 0.5%. This shouldn't surprise anybody. We had the first inflation data that we've had in a very long time come out this morning. You're seeing the dollar sort of react right now because those PPI numbers were in line with expectations. We'll talk about that in a minute. But right now, it looks to me like the bidders are involved in the Great Britain pound USD. Will there be pressure because of the budget in the UK? I don't believe it's going to bring a ton of pressure to it, Steve, but I will say that you definitely are watching the top side of this market. Tremendous bullish break right there. I mean, that bid was 131.07. You're up about 100 pips. So one of the things that I like to do is, especially when we see a big breakout, is try to figure out exactly what's going on from the macro perspective. 38% level, we're getting reestablished back above that, which essentially is 2025's range. Nice low, nice high. There's a pullback back above 38% and rallying to the top side. I'm bullish, definitely bullish here. I would be watching 131.50, 131.50-ish to the downside. If this budget does bring some action, maybe the dollar gets back a little swagger against the pound tomorrow. That might be a pretty good bid. You can see you've got a 13-month EMA is right there at 131.53. We're above that level as well. We've got 131.43 down there at 38%. That's probably going to be a robust support zone. That would be an area that I would think of trading on the budget news. So that zone right there, pretty good support zone. You can see the market sort of bottoming out, basing out, and it looks like the uptrend that this year is really, the uptrend of 2025 is definitely valid. As long as our price is above 38% of that move, we're feeling pretty good about it. So interesting stuff, that's for sure. Lewis, the Great Britain pound already baked in. I think I agree, Lewis. There's a little bit going on here in the United States we'll talk about, but it looks to me like somebody probably already got the budget numbers and decided they were going to go long. All right, let's go ahead and take a look at these numbers out of the United States. PPI and retail sales was the news of the day. Look at all these numbers. I mean, look at all these numbers. It's uncanny the way that they're releasing these official statistics after the government closure. I don't know that it's responsible. I don't really know the aggregate impact any of these numbers are having on the markets. But one thing we know for sure is the U.S. dollar is slipping. And the reason why the dollar would slip is because these PPI numbers came in as expected. Core PPI year over year a little bit better than expected. So let's just run through it. Remember, the PPI is an inflationary statistic. It's for producers. It's for wholesalers and wholesale pricing. When you see this sort of go down, in my view, that's sort of a better barometer than CPI. CPI is from the consumer end, PPI is from the producer end. So we're talking about raw materials. We're talking about wholesale inputs that go into final goods and services. And when you see those prices rise, typically that gets passed on to the consumer. So when you see PPI rising, and if the prices get higher for the wholesalers and the producers, you know it's going to be higher for you. So this, in my view, PPI is a big deal. And today we got a decent set of numbers. I mean, if you believe them, they're out of September, so they're delayed. We're talking about a 2-month delay at this point. I don't know how valid these really are, but you can see year over year, core PPI came in at 2.6, but beneath expectations and the previous release. Also, monthly came in at 0.1, which was beneath expectations, a little bit above the previous release, though. So that was sort of was September a great month? No, but those yearly core PPI numbers are definitely sort of the engine pulling the train right now. PPI, a regular PPI figure came in at 0.3%. That's exactly what we thought. So that's in line with expectations. Anytime you hit that, you're thinking, okay, we're in line with expectations. So what does all that mean? Well, I mean, it basically clears you for takeoff as far as a rate cut. Now, we have been just going back and forth, rate cut, no rate cut, rate cut, no rate cut. We don't really know. Right now, it's about 60-40 of a rate cut on December 10th, which is coming up. I think that you're probably, John Williams from the New York Fed came out and said, maybe we should cut rates. And our expectations flipped completely. This sort of aids that narrative saying, inflation's coming down a little bit towards your 2% objective. So you're sort of cleared for takeoff with a nice rate cut. I don't know if that's going to develop. I believe what I told you yesterday. I think that you're going to see those rates stay firm. They're going to stay right where they're at. And that's going to be a bit of a challenge for traders to address, especially in the holiday season. Buckle up. Early December is going to be a lot of fun. All right. PPI came in line with expectations, food, energy, transport. Don't worry about those figures. The key thing to remember here is you came in as expected. Now, you've got ADP employment change weekly. This is a new statistic that they've started dropping, started featuring more and more, and that's because we don't really have any jobs data. So now the ADP is putting out weekly employment change numbers. They've been doing this for a while, but now it's really featured. And they're sort of looking, the markets are looking for any kind of jobs data that they can find. And right now that ADP number is carrying a little bit of weight. Personally, I wouldn't look at it. I wouldn't worry about it. We'll worry about NFP when that comes. That's on the 16th of December. Don't ask me why it's on the 16th of December. It just is. All right, retail sales was also released from September, came in at 0.2% beneath expectations, and also yearly came in well down from the previous release. So these retail numbers, these are going to become a bigger deal as we roll into the end of the year, the holiday season, where you get a lot of purchasing here in the United States. That block of time typically has an impact on the markets in January. So we're going to be waiting a little bit for any retail numbers that mean anything. CB Consumer Confidence Index, the chart book Consumer Confidence, you're looking right there at 88.7, and that is beneath expectations, and it is not a pretty level. We have seen the consumer confidence in the United States dry up since COVID. Before COVID, CB Consumer Confidence was up over 100 regularly, right around 100, over 100. We're well beneath 100. The confidence has never really recovered from the entire global shutdown, and we don't know that it will at this point. It's starting to feel like we're in a new era of finance, and it's one that's not necessarily good. So we got a lot of changes, a lot of things to deal with, and that consumer confidence number, that's a combination of people being fatigued with the high pricing. It's a combination of the housing shortage and the problems in the housing sector here in the United States, and there's just a lot going on right now, and the confidence is not there. Typically, when you see low confidence numbers, you probably head into a recession. Now, I don't know that we're going to get there. I think they're going to cut interest rates and probably promote economic growth that way. We just have to wait and see. I think Q1 2026 is going to be a key period for the Trump administration, and it's also going to be a key period for our markets. So you're definitely going to want that. Let me see, Team Marina. Let me see. I heard prices doubled for health ins and open enrollment that just started. That's unbelievable. Health insurance. Prices doubled for health insurance for open enrollment that just started. Yeah, I mean, the U.S. Listen, I'm not going to sit here and whine about the economic situation here, but there are some major challenges here in the United States that if they're not addressed, I don't know how they ever get better. So you got health insurance, which is huge. You got housing right now. I don't think we've ever seen rents or aggregate home prices as high as they are right now in the United States. Very difficult. And then you go and you buy your turkey and all the things that people have for Thanksgiving, and it's just, we went to the store yesterday and the bill was unbelievable, and there's just going to be a couple of us, so I couldn't imagine trying to feed a big family and go there, probably drop $500 on a Thanksgiving meal. It's unbelievable. So things are not good. I mean, let's just be real honest. Can they get better? Yeah, they can get better. There's a lot of stories out that are optimistic. Ukraine reportedly agrees to U.S. broker peace proposal. That's a big deal. Potentially, if you get a peace by the end of the year or maybe early 2026, you could definitely be in a situation to see these markets rise, and maybe potentially maybe gold falls. Who knows? Core wholesale prices rose less than expected. Okay, they still rose, though. Sellers are taking their homes off the market in the fastest pace in nearly a decade. I don't know about that. I would have to really dig into those statistics and see if there's anything there that suggests that sellers are taking their homes off the market. I don't necessarily believe that at all. I think that's just more than likely that's just a function of seasonality here in the United States. Wintertime, not the biggest home selling not the biggest home selling season in the world. So we're definitely watching that closely, but I would have to do some more digging. I don't believe that for a minute. All right, U.S. dollar. U.S. dollar is definitely down a little bit this month. I mean, you can see we've got a doji setting up. We're off about 0.04%, so pretty flat. We've sort of analyzed this up and down, sideways, front and back. There's the dollar index. You see the nice big sell-off, and now we've got that L formation, that capital L formation. As soon as you see it, you've got to recognize that you're in a bear market. That's an L. Sell-off, rotate, still beneath 38%. That speaks to the downside. You get a rate cut in December, probably going to go lower. Remember, we're going to turn over the FOMC. We're going to have a new Fed chair in 2026. You're probably going to see the dollar lose. That's my best guess moving into 2026 is a dovish dollar. The dovish dollar supports growth in your equities markets and also sends commodity prices higher. That would be my view going into next year. We still have another month of events, though, that we need to take a look at and see exactly what the tone is. But I am definitely bearish to the U.S. dollar, but it has been a little bit stronger than we anticipated, me personally. But I still like that 101.50 level. That would be a great sell for your dollar index. Definitely want to keep an eye on that. Right now we're trading about 99.67. Maybe we get a rush up there, probably ahead of the Fed, potentially. It just depends on our interest rate expectations. All right, let's look at gold. This was something that I put out earlier today. We had the Switch Markets newsletter, and we also had the Switch Markets video, the Picks of the Week video that came out. We talked a lot about AI, China potentially going into Taiwan, a blockade being detrimental to the AI space. We talked about that a little bit. Our key markets were gold. I think we looked at Bitcoin and the US 100. So for gold, this is as easy as it gets. I think I covered this yesterday. You had really two spots here, sort of have a little bit of a spike high there, a little bit of a spike high, and there's your trend line. So you've got a nice trend line setting up, and we're on the third, excuse me, we're on the third touch of this trend line. The third touch is everything. All right. A trend line is essentially just 2 price points. That's it. You can see this a nice 45-degree angle down. So now we're trying to decide if we're going to fail here and maybe just trickle down and get a big correction in gold, or if we're going to break out above that trend line and potentially get cracking to the top side. Remember, we sort of had that cup with handle on gold and silver. We have a lot going on in these metals markets. What I'm looking at right now is that trend line is a pretty big deal. If we get a weekly close somewhere up around maybe 4,200, I think we're going to extend and go have a look at 45 and then potentially 5,000. I don't know that we get 5,000 by the end of the year. I think that this market's definitely slowed down over the last several weeks. You can see really robust in here. Went up to about 4,400, and then came down, and we have just been chopping sideways right around 4,000. I'm not really overly optimistic that we're going to get a huge bullish break just yet, but it could come, and it will come potentially on your strike against Venezuela or your rate cuts. A dovish Fed will send gold higher. There's no question about that. It's just a question of how high this market really does go before it stabilizes. Right now, it looks like we're stabilizing around 4,000, sort of an area of fair value. With the Fibonacci's, I would definitely be looking at something like this, potentially right in there. So your pullback zone, you'd love to buy 39.75s, something like that. But this breakout looks to me like it is developing, and that's as easy as technical analysis gets, everybody. No indicators needed. You're looking at pure price action. You had sellers here, and now the bidders are challenging that 45-degree downslope. I'm watching it closely. I think you could definitely explode to the top side, but you've got to have the right market drivers. All right, let's go down to that 920 EMA crossover. I really like this strategy. This is one that has been a pleasant surprise for me. I've been watching this very closely and saying, okay, how can we apply this thing and give ourselves an opportunity to be very successful trading it? The biggest thing that I would look at, your 4-hour chart here on gold is a fantastic time frame, especially if you want to swing trade gold. 920 EMA crossover with a 4-hour chart, not bad at all. And you can see right there, there's your bid. So your bid's right there at 41.20, and you're up about, $25 somewhere in there. So that sort of speaks to potentially getting that break and that run and maybe blowing out that trend line. So if you have that trend line, you can see there it is. And then now you've sort of got a bid here, and we're just sort of getting a little bit compressed right around 41.50. So if we break higher, and it looks like we may, you probably could get a nice runner, and there really aren't any rules. If you wanted to use market structure, potential swing trade market structure, you could be shooting potentially for that liquidity sweep right up there, which is right around where? 42.50 key level. So if you wanted to do something like that, it's not a bad trade. You just got to dial down your leverage. And remember, this is going to be a tough week to swing trade. Specifically, a swing trade is going to be a little bit difficult because liquidity is going to be in and out of the markets, and that makes life very, very difficult to get any sort of follow through at all. Pretty good trade there, though. We'll go ahead and watch it. If I was building it, this is probably what I would be looking to do. So your long position could be somewhere in here. You probably would be looking to target something like that. And then your stop loss, you got a couple of options. You could put your stop loss right beneath your trigger bar. I would probably give it a little bit more room to work, maybe somewhere down around that swing low, give you an opportunity potentially to get maybe just a little bit better than a 1-to-1 risk versus reward. And if you wanted to extend even a little bit and make it an exact 1-to-1, you could certainly do it. It's just up to you what kind of risk you want to assume. And, that's significant. That means your stop loss is down there. What is it, right around 110? So you're going to have to dial that leverage way down. But it's a pretty good position trade. I think we might actually maybe draw a little bit of blood there later this week. Not bad, though. Not a bad trade setup at all. And it really is all predicated on that trend line, that weekly trend line in the gold market. Definitely want to keep an eye on that. All right, let's go ahead and take a look at U.S. oil. I promised to look at U.S. oil yesterday, and I didn't really get into it, but here it is, U.S. oil 57.87, and it's pretty funny because there's a lot going on in the oil market right now, and it looks to be pretty bearish. So we've sort of have the bit of a Fibonacci level here that I tried to drew yesterday, and you can see we traded beneath last week's low already, so you'd actually have to adjust your Fibonacci's to really go off that lower extreme, 49.25, pretty good sell, somewhere right up in that zone. I think you could probably get that done. But realistically, the area that I'm watching with vast interest is going to be something right down here. Yearly low, right in this zone. Yearly low is going to be what? 55.96. And then what's that low right there? 56.15 and 55.96. So that's going to be your yearly lows, somewhere right in that zone. Well, not necessarily. This is going to be your yearly low, right around 55.15, but it's right there. Interesting. I mean, you've got sort of you tried it there, sort of traded down into this area just beneath 56, and now we're making a look at taking that run to 55. So I'm watching 55 closely. The play for me probably will be a bid from somewhere right around 55.25, maybe 55.29. Somewhere right in that zone is going to be pretty tasty. It's going to be a tough one to pass up. The stop out's going to be tight, though. You're going to look to stop yourself out probably right underneath 55 somewhere. The last thing that you want to do in this market is end up holding longs if you do get that break beneath the yearly low. So you got to be very, very careful there. But U.S. oil, The bearish market sentiment's definitely creeping in. We're right around 57.80. I could definitely see a bearish run down towards our yearly lows here in the coming week or two. So we're watching the EIA market closely tomorrow. The EIA U.S. oil stocks numbers. We're watching that closely. We've got to make sure that we still get those supply builds to support the sort of the fall seasonality narrative facing WTI crude right now. Interesting stuff, though. I'm interested. I think that we're going to get this break. We've been waiting a long time for U.S. oil to do something, and I think we're just about there. Definitely just about there. All right, everybody, let's go ahead and take a look at the Dow here and go ahead and wrap it up. You've got the U.S. 30 market, sort of a weekly. We're just looking at price action here, but realistically, you could definitely be drawing a trend line. I mean, it's a pretty good channel. It really is. Let's see if we got a channel here. We'll just draw a trend line. Something like this, though. I mean, not necessarily too bad. I mean, it's sort of vague, but maybe like that. You could do something like that potentially. You'll notice you're getting that reversal. Do we want to be bearish or bullish? It's going to be relatively difficult. So you could probably draw it, maybe adjust your trend line somewhere up in here. You could do that. Are you bullish or bearish? I'm bullish, very bullish here. U.S. stocks, I think that rate cut, those expectations are going to mean everything in December. 50,000 is the biggest level in the room. We're probably going to be building shorts from right in front of 50,000. Stay tuned for that trade idea. Still about 3,000 points away. However, if we're rallying 500 or 600 points in a day, then you see exactly what we're in for. We're in for probably a bullish break and a bullish run towards 50. We'll be watching that relatively closely. Definitely stay cognizant of these markets this week, but I don't know that you pile on the risk just yet. It's sort of a slow week. We're moving. The markets are moving. There's some good trades in there, but things are definitely in holiday mode. That's what I would say. All right, everybody. There's some other things that we can cover. We're probably going to wait and cover it tomorrow. This week, the biggest thing to really talk about is just patience. You've got to have patience, and it's hard. Right now, the markets are up 555, so you're up about 1% in the Dow. So if you got that day trade, that's a fantastic trade. One of the things, as far as that contest goes that I'm in, let's go ahead and get this going. You'll notice I liquidated my positions. Yesterday was a fantastic day. Today, not much is going. I'm holding Bitcoin longs, quantity of 5, and these are mini micro Bitcoin or whatever it is on the CME futures. And we're just sort of holding this, waiting to see what happens. I don't know that there's any other trades. Already satisfied the number of trading days, so I'm not really too worried about getting overly active. I'm looking for that big rally in Bitcoin, though. May take another gold long. That's potentially a pretty good move as well. Just want to wait and see how this session pans out. Probably make those decisions going into the Tokyo session. But 32,000, not a bad showing. You go to the leaderboard, though, and you just realize, oh, man, you're not even close. Not even close. So we're rocking about 997. So we're in the top 1,000. That's not bad for 80,000 contestants. We're up about 32%. But you look at some of these leaders that are, they've already lapped me 3 or 4 times. But there's still time left in this thing. So we're only looking at, about 9 more days. So we'll make probably a couple trades, take some positions. As far as what a final goal would be, I genuinely don't care about any of this. We're going to try to move up the leaderboard, so we're going to take some huge risks. And if they don't work, they don't work. There's really no point of sitting around trying just to hang on to what you got. You got to really be aggressive in these contests. We might actually make a video about contest trading and how it's very similar to tournaments, poker tournaments, how you just need to position yourself in the markets that are moving and attempt to grab those big moves when you can get them. For right this minute, it looks like stocks are definitely moving. Maybe that's one to play. The Dow 30, US 30, pretty good stuff. We just got to wait and see exactly how they shape up. All right, everybody, I'm going to go ahead and sign off. I understand that most folks are not really going hard this week, so our viewership's probably going to be down a little bit, but that's okay. We're not too worried about that. I want to thank everybody for showing up, as I always do. Remember, the Black Friday deals over at Switch Markets are definitely worth checking out. If you're a brand new trader, get on over there. They'll boost your liquidity and your purchasing power. Also, we're going to have a live tick scalping webinar tomorrow. I'm going to talk a little bit about tick scalping and what it is, and we're going to do some tick scalping live on the futures markets and execute some live trades and see if we can't. We're going to have a goal. We're going to go in and see if we can sit here for an hour, 30 minutes or an hour, and see if we can dive in and maybe make 10 ticks. I told you guys about the 9 ticks, how I was brought into the markets. Make 9 ticks today, Shane. Make 9 ticks. Well, we're going to sit down and see if we can do it. We just got to get a few levels and maybe a couple of trades going. All right, everybody, thanks again for joining me. You're welcome, Lewis. You're welcome, T. Marina, Tuku. Absolutely my pleasure. Lita, absolutely. Steve Francis and Ralph. Good to see everybody back. You guys have a fantastic trading day. We will be back tomorrow on the Switch Markets channel exclusively and also in the How to Trade Trading Room for our Tick Scalping Live webinar. Be sure to show up and join us. We'll see if we can hit our 9 ticks and see if we can put a few bucks in the pocket. All right, everybody, have a fantastic day. Trade the action well, and we'll talk soon. See you.